Good morning, everyone. It's Friday, September 19th. Ben Buckner and Dan Bossy with you. Last Friday, the anxiety in the morning was all centered on the USDA September WASD. This Friday, it is all about Trump and Xi's phone call, which is ongoing currently. We're not sure when it ends, what will come out of it. We could extend deadlines, we could have deals, we could have no deals. We're all waiting on that. That's going to dominate trading today, I suspect. It's also that time of year where, in addition to looking at maximum numbers of combine yield data, which are pretty variable, we start to read the Buenos Aires grain exchanges crop progress report every Thursday afternoon. And so we're seeing corn planting in Argentina. Corn farmers there, they made a note to suggest they might seed more first crop corn because of just the abundance of soil moisture. And the Argentine wheat crop is rated 85% good to excellent, a record for this time of year in the Buenos Aires series. So that's kind of the fundamental news. But again, it is all Chinese trade, U.S. trade deals that dominates today. Dan, I will let you break down what you're seeing.
Well, thank you, Ben. And you're right. It seems a little strange why Argentinian farmers would be planting near record acreage of corn when prices are where they're at. But, they haven't had this kind of soil moisture looking backwards since 2021. So they're going to take advantage of it. And if they get a yield of 8 hectares, 8 metric tons per hectare, they will produce a corn crop over 60 million tons. So that's important. That's 10 million tons more than last year. But let's think about what's going on here this morning. And in the background, of course, we have the U.S. And China talking on the phone. Trump and Xi are having their first phone call since June 6th. They're expected to talk about TikTok mostly. TikTok should take up a lot of the call. Now, remember, it's 9:00 p.m. in Beijing. So I'm not sure Xi will want to stay up late for the movie, but, they'll talk a little bit here. But I'm not expecting this call to last much more than an hour, hour and a half. I think we'll hear something here this morning, maybe closer to, let's call it 9 or 9:30 Chicago time. The market will be watching to see if there's any indication that China's willing to take U.S. soybeans. Right now, from what everybody is saying, China's not buying U.S. soybeans because of those fentanyl tariffs of 20%. China put tariff at 23% on U.S. soybeans, and here we are. So interesting also is that Bloomberg is reporting that China has now bought all of its soybean needs through the end of the year. That means that if we did have an export window for the United States, we're talking about maybe 4 to 6 weeks. That's not a lot. So if anything does happen, this may be more important for, let's say, new crop soybean demand than old crop soybean demand. But I will tell you, there are commercials out there that believe that this is a no China year for soybeans. Let's hope that's not the case, but it's surely possible as we look forward. And again, I think that trade deals are not done over the phone. They're done in person in the wee hours of the night after a long, long deliberation, and everybody's tired. As you think about, a tweet here this morning, Secretary Rollins put out that she's excited that Taiwan is committed to buy $10 billion of U.S. agricultural goods over the next 4 years. I think that's great. I think that's marvelous. We're happy to have these kind of commitments, if you will. Nonetheless, China last year, bought somewhere around $3.8 billion of U.S. ag goods. So I don't think it's additionality. This is kind of keeping what Taiwan does, and I wouldn't expect Taiwan to buy from anyone else. So it is nice that we're getting these kind of assurances, but it's not going to change the direction of the grain markets just because the grain market is already expecting Taiwan to take between $3.5 and $4 billion annually. China, however, as you look at these trade talks, have been thinking about this for 4 years. I just used this graphic of rare earth minerals and metals. You can see that China is by far there in orange, the biggest supplier. It has, of course, held the United States somewhat hostage, which is why we had the Geneva Accord. But the Chinese have also been planning and using things like soybeans, ag products, energy. This is their hook, if you will, to get at the United States. And of course, they've diversified their exports to other countries. Latest data shows that U.S. Chinese imports of goods into the United States is now down to about 9% of their total. So we become a more modest market. If the Chinese lost the U.S. market, not as big as a deal if it would have been back in, let's say, 2020 when they did their phase 1 deal. So again, China's on the offense. So far, they haven't ceded anything to the United States. I think this is important to recognize as we think about the ag trade going forward. When you look at the markets, soybeans really been holding a broad range for much of the past year. If I go back to January, let's start it out in December. Notice that soybean prices have been holding really between 1080 on the upside has pretty much been the resistance. On the downside, supports come in anywhere between 930 and 970 a bushel. I think that's kind of holding the market. Now, key for this soybean market nearby will be if we hold that 50-day moving average at 1026 or 1027. Closing or breaking below there will get the funds engaged on the short side of the bean market again, especially if China's not there as a buyer. So something to watch, 1027, 1026, very key level for the soybean market looking forward. As you look at the big bear market, it's really been wheat. The wheat market's been in decline all the way looking backwards since February. Prices are still softening. We're not above any key moving averages. Maybe the wheat market stabilizes here a little bit. I can envision that because seasonality is now starting to turn more positive. However, we're still getting big crop estimates in terms of world wheat exporters. And until that stops, whether it's the rain in Argentina, the rain in Australia, better crops in Canada, Russia, Europe, the market's going to have difficulty sustaining anything. So wheat has been one bear market, and we think it could stabilize but not change. Corn has been the one that's rallied more than expected. I would have expected the corn rally maybe to peak out around 420, but we've done 10 cents better. We've gone up to an open chart gap at 430. We'll see if that chart gap can hold in the weeks ahead. On the downside, notice that moving average at 414 with trend lines supported around 418 or 419. So those are the key ingredients or key areas to be watching. We got a big harvest ahead. Yields are starting to improve in those areas that haven't been affected with rust as much, or those that have put on fungicides. So we'll see how the corn market does going forward. Lastly, we'll talk a little bit about weather. The one map on your left is 7-day rainfall. So notice the abundance of rain through the plains and western Corn Belt. Most areas picked up at least a half an inch. That'll help seed moisture, and some of the early combine data is much, much better there, far better than what we're seeing in the eastern Corn Belt. The good news, however, is that in a bunch of rain, soaking totals are coming towards Illinois, Missouri, Indiana, less so for Ohio. But this soaking rain should start a replenishment. This is also going to be very, very key, Ben, for the Mississippi River flow, which is starting to get low, affecting drafts. But I imagine this rain will now lift those drafts and get us back into a more, let's say, normal level. That's going to be better for cash basis levels, especially along the river. So as we go into the weekend, Ben, still hard to get overly bullish of things. Nonetheless, I'm also watching China very closely, and we'll see what Trump says today. Hopefully we'll know something by 10 o'clock, and the markets will react accordingly. There's a lot of hopeism, I call it, in terms of price in the soybean market.
Yeah. And so $1, of course, gets you in here, and we will get you all the info you need about the results of the Chinese-U.S. call, what it means for the markets going forward. And I think, too, we just kind of want to communicate when you got big stocks of things, one of the features of markets like that is you do lose volatility. And that's kind of been what we've seen, at least this week. I know there's a lot of uncertainty, but it's choppiness, markets not moving very much. But soybean, U.S.-Chinese relations, whether that improves or sours, I think is critical today at least. And then we'll be back Monday with everything you need to know in the grain market. So all the best trading today. Thanks for watching.